what happened to a 3.5% to 4% 10-year yield by 2019? It's 2019, and we're at 2.75.
2 3/4.
What's going on?
So I think right now, we think right now that the market itself has slowed down. You've seen the data slow down as far as GDP expectations, as far as inflation expectations, and as far as future Fed rate hikes. And all of that gets factored into the yield curve itself. And the Fed controls, obviously, the short part of the curve, but they don't control the intermediate and long part of the curve. And what you've seen is the market digest some of this data and react and obviously lower rates.
Okay, what do you think the Fed is going to do today? What do you think the Fed is going to say today? Because it's just like at home, right? It's with your parents. Yeah. Don't do what I say, do what I do. Or, is it backwards?
Well, you're right. Actually, it's two things, right? It's action, what are they going to do, and guidance, right? From an action perspective, we don't expect much new there. We don't expect them to raise rates nor lower rates. We don't expect them to move on quantitative tightening, which is the release of their balance sheets. We do expect a lot of guidance out of this. And that's one of the areas that the Fed has kind of struggled recently, is just kind of walking the markets through the idea of when is the right time to pause. And we think that now they're approaching that time. We thought they might have approached that time sort of in December at their last meeting, but we think this time is now going to be the case. They'll obviously pause today, but likely set the stages for pausing even more importantly in March at their upcoming meeting.
Okay, do all of our great viewers out there and their investment portfolios and their 401ks and 529s, do they care more about interest rates, whether we get a quarter point here or there, or do they care more about the Federal Reserve reducing its balance sheet, what they call the quantitative tightening?
Yeah, so they should care more about interest rates right now. The quantitative tightening, we think, is pretty much baked in. In fact, the autopilot word was used last time that the Fed spoke. We think that the market just wants everything on the table to just be considered and to be a little bit more flexible in their wording. The reality is, though, they need to get that balance sheet down. It's there in their back pocket if they need it, but the reality is they're going to try and wind that down. It's around $4 trillion right now. They're trying to get down to $3.5 trillion. But the reality is what's more impactful to investors right now, to people that are buying houses from a mortgage rate perspective, is their view on interest rates. And we think there that the Fed, like I said, will pause in March, but likely raise rates 1 or 2 times this year.
Can we make money in the bond market? And if so, where?
Yeah, so in the bond market right now, you want to play a little bit more defensive. You're going to play defensive now with the opportunity to get more aggressive towards the end of the year because we're getting towards the end of the interest rate rising cycle. So playing defensive now, don't take as much interest rate risk, as much credit risk. Stay on the short part of the yield curve, right?
And shorter dated bonds.
Shorter dated bonds. In the
2 years?
2 to 4 years.
T-bills?
Type of range. No, you don't have to go into cash necessarily, but sort of enhanced cash. And sort of that 2 to 4 year area, you can get a lot more yield, and you don't take the risk that you're going to get further out in the yield curve. That's the place you want to be right now because you have such a flat yield curve. And you don't want to take too much credit risk right now. A lot of volatility in the market as you get towards the end of the cycle. But be prepared. As the year progresses towards the end of the year, you're probably going to have to walk out to the intermediate and longer part of the yield curve to grab that.
George Rusnak, appreciate it. Enjoy the fine day out there.